Here's an established uptrend with several candles that have the proportions of a bull hammer pattern. But of course, it won't really be a valid bull hammer pattern unless these types of candles form within a bearish context of at least a minor downtrend like this. Interestingly, in this case, there are 3 bull hammers in a row, though it's only the last one that gets the most attention, because the candles right after it manage to trade and close above its high to provide a much stronger indication of opposition to the recent drop, thereby signaling the more likely transition towards more neutral to even bullish movement. In theory, some of the strongest bullish sentiment can revolve around the bull hammer's closing price, which in this case doesn't line up with any recent swing points, but rather an area of noticeable congestion in the prior uptrend. A wider support range can also be defined by extending down to the bull hammer's low. In addition, these reversal areas and levels around the candle pattern gain significant influence on the chart since they are approximately in line with Fibonacci retracement levels. In contrast, this next example starts with a bearish continuation. Closer to the start, there's an example of a bull hammer that is negated due to the next candle strongly closing under its close. Following that, there are examples of bull hammers with successful upswings, with price immediately closing above their highs. However, it's done with comparatively lower green volume, which adds to the weakness of these rebounds upon contacting this defined upper boundary in the bearish continuation range. Then more examples of negating the bull hammer pattern. When the steeper portion of the downtrend eventually subsides, there's still a minor decline, and within that, candles that aren't with ideal bull hammer proportions, but still have proportionally longer lower wicks, that hold the real bodies firmly above defined short-term support, resulting in persisting doubt of the market being able to accelerate down to lower prices like before. Now, selling volume significantly increases and the market closes under 21, but still maintains contact with that level. In addition to this current candle still being a bull hammer, albeit with a slightly longer than normal upper wick. Negation of the bull hammer, no reversal, and instead the next candle closes under its low. However, it doesn't turn out to be a decisive break because that candle is also a bull hammer that is subsequently followed by candles closing well above its high and the 21 level. So we can now mark that bull hammer's low to better define a range of support in light of those short-term developments that have a long-term impact on the chart. A similar situation on this next chart. The main reversal shifts the center of support and widens the range down to this bull hammer at the center of this upward reversal. Initially, support for reversing the previous downtrend centered around this harami pattern, which is still generally in line with the bull hammer, similar to the last example that saw the area of support shifting its concentration down and extending slightly. And in the broader context, this also turns out to be part of a double bottom reversal. With this new uptrend, there are more examples of bull hammers, mostly centered around ending these bearish retracements. Like on other charts, here are even more bull hammer structures with close to ideal proportions, but they don't occur in front of falling price, so they are hanging man candles in bearish scenarios. The next example begins with negating bull hammers that are even bearishly engulfed to make the situation similar to hanging man candle patterns that are also bearishly engulfed, except this is in more of a bearish continuation rather than reversal context. On the other side, the latest bull hammer is bullishly engulfed, so it leads to sharper opposition to the downtrend, at least in the short-term context, because even when there's this ideal scenario with bullish reversal candle patterns and even increasing green volume, sentiment is mostly confined to short-term context that is situated within the bigger picture that is a long-established downtrend. Here's another relatively quick rebound brought about by bull hammers in the short term. However, a major bearish advantage is still evident, especially with the continuation ranges not far above. Since another bull hammer has just formed in line with the past upswing area, there could be more significant progress towards a larger uptrend since the candle right after the bull hammer is also green and closes above its high, resulting in the range centering around 70.50, becoming a key focal point as price once again falls sharply, only to rebound yet again. So if you've already seen my series on chart patterns, this will look familiar, because these bull hammer candles were also part of forming the basis of one of the primary bullish reversal chart patterns,